Hello, everybody, and dear guest. Today, we would like to discuss some important points from the Turkish economy. Today's webinar is related to current situation in Turkey from investment and investor perspective. After the COVID-19, there is a big discussion in Turkey and also international market whether Turkey will be providing some opportunity or disadvantages. But considering to change of the supply chain management and also the lessons we learned from the COVID-19, as a Nazali Tax and Legal, we strongly believe that Turkey will be providing some opportunity for the investor. As of today, we are more than 200 people with 5 offices in Turkey and also 5 countries out of Turkey in UK, Netherlands, Russia, Morocco, and also Ukraine. We are a tax and legal firm. As of today, more than 200 people. We can provide related to Turkish investments, tax, legal, accounting, all compliance matters. I would like to thank my partners, each of them very expert and very qualified experience on their subject. They will be providing a short perspective regarding their core subjects. And Nilay will be our moderator, and also sometimes she will ask questions, or maybe she will make summary. And Nilay, it's your turn. Thank you.
Thank you, Ersin, for the floor. Good morning, ladies and gentlemen. I would also like to welcome you for all joining us today. I am Nilay Göker-Duran, the Corporate and M&A Partner at Nazali Tax and Legal Services. We are all excited to reunite again, happy to be part of today's webinar on current situation in Turkey from investment and investors' perspective. Thanks to our speakers, we have interesting legal and business agenda to discuss further after a year the COVID-19 pandemic hits. At Nazali Tax and Legal Services, we are closely following up the developments in the market as a full-fledged law firm operating in different jurisdictions. Well, as we have many topics to discuss, I would like to begin with introducing you to Ülkü. Ülkü is our corporate M&A and data protection partner who has in-depth knowledge and experience more than 15 years in her field. Ülkü, would you like to introduce the topics that you would like to cover today, in particular with a global market overview of the previous year together with the situation in Turkey?
Of course, Nilay, thank you so much for giving me the word. Thank you to the audience for their great participation. We can now move on to the presentation. At this first session, we will look at a glance of global and local M&A market in 2020, mostly shaped by COVID-19. Then we will look towards 2021 with great hopes and expectations, which continue to be shaped by, of course, COVID-19, but this time we have a better know-how, muscles, and hopefully worst days are over. We will discuss 2021 M&A market trends, challenges versus indicators shaping our M&A activity, offensive and defensive strategies for both investors and corporations, and finally issues arising from digitalization, which will continue to shape every aspect of our lives, business, so as our M&A activities. When we look towards 2020 global trends, we see that streaming data from different researches and reports. The global deal value was declined by 15% in 2020 compared to 2019. So it was a drop down from $3.3 trillion US dollars to $2.9 trillion US dollars, whereas the deal count declined by 8%. The most active quarter was the third quarter, where pandemic cases dropped down. It was summer. M&A activity has varied across region, and some regions, especially the emerging economies, affected the most. Biggest challenge was uncertainty, for sure. Deal makers are, of course, accustomed to facing uncertainty, but COVID-19 and its meteor impact on global economy sent some shock waves, of course, to the M&A market as well. So we all adapted to this current environment, changed the way we live, we work, and also changed the strategies in our M&A activities. And M&A activities also go into digitalization, and virtual M&As become more and more popular. The global fiscal packages provided by the governments triggered strong rebound across financial markets and stimulate the market. The most active sectors were TMT, technology, media, entertainment, and telecommunications. Deal value trends varied widely by sectors. For example, aerospace and defense declined by almost 90%, whereas telecommunications increased by 30%. Unsurprisingly, the number of mega deals, big ticket transactions, declined sharply. Small, mid-sized deals with strategic approach really were increased. When we check also sector-specific shareholder return, we see that financial markets bring the lowest return, whereas telecommunications and also healthcare, TMT and healthcare industries bring more shareholder return to the investors. When we look at Turkey, Turkish M&A market in 2020 was really promising and demonstrated resilience. Global M&A returned to the market in the third quarter. The deal volume was $9 billion and the number of deals were 304, was an all-time highest in the Turkish M&A history. Of course, this was created mainly by 70% of the deal value created by Peak Game Zynga acquisition, actually the first unicorn transaction. Also, the transactions of the Turkish Wealth Fund, largest deal value with Turkcell Turkish Wealth Fund acquisition, also created a big impact. Excluding these big tickets, a few big ticket transactions, Turkish M&A market activity was also similar to the global trends, we can easily say. There was a 30% increase in deal numbers. 44 of the deals were backed by VCs and angel investors. Foreign investors' deal volume increased by 35%, demonstrating investor confidence in Turkish market again. The financial investor activity reached at its all-time deal number with 164 transactions. It is even also, the record is even broken in the first quarter of 2021. I will pass to that point as well. The financial investor activity also mainly created by VCs and angel investments, where the private equity investments dropped down. Small and middle market transactions plus early stage investments create the majority. Turkish startup ecosystem boosted entrepreneurs who cashed out successfully back in 2019, cashed back into the startup ecosystem again, which was really stimulate the startup ecosystem market as well. And the sectors like internet, mobile, TMT sectors were the most active sectors in terms of M&A activity. When we move towards 2021 globally, worst days are over. We learn how to deal in those worst circumstances and build up our muscles for creativity, productivity, and innovation. Markets recover as investor confidence returns. Clear long-term strategic planning become more and more popular than the opportunistic approach. So sustainability will well taught through deal valuation based and on robust strategic analysis become more important. The companies will need to repair, rethink, and reconfigure their businesses. The initial focus might be more defensive strategies for the sectors affected the most, and very aggressive and offensive for the sectors who gain profit a lot during this pandemic. Small to mid-sized business with less robust cash position will struggle as government support rise up, so which will trigger, of course, opportunities for the investors as well. In this recovery and rethink phase, C-levels and leaders are considering strategic capital allocation and determining what constitutes their core business, which is really important. And divesting the unrelated and not core business would be the defensive options for the companies, we could easily say. In 2021, it is the year of M&A with value creation perspective. So the M&A activity will create the value story itself. Scale and technology will be the key elements for sure. Tech M&As are more to be seen, are on the horizon, but not only by tech companies, by large industrial companies who are ready to invest and digitalize their also supply chains and other and to keep up with the disrupted technologies. So we will pursue synergistic M&As and look for combinations between incumbents and disruptors. According to JP Morgan, 3 teams will dominate this year: domestic consolidation, creation of pan-European champions, and cross-regional acquisitions. Strong Ps remain ready to act so as businesses and sectors reposition themselves during the anticipated recovery stage in 2021. And beyond. Acquisitions driven by innovative companies with a strong link to their customer base will increase. Special purpose acquisition companies, SPACs, were like the rising stars in 2020 in the US market, and they will of course bring new equity on the table and new business models on the table. So we will see IPOs, M&As, as well as SPACs and their combinations in M&A markets. There will be also other alternatives, alternative deal models. We will see more joint venture alliances, digital partnerships, corporate venture capital and partnership investments, and club deals, combining more a few private equities together to invest in more big ticket transactions. COVID-19 pandemic acting as great accelerator also for geopolitical change, I would easily say. We see many investors and corporations enter into certain markets and exit from certain markets. There will be some trajectories like reshoring, diversification, regionalization, and replications. Variables such as Brexit, of course, after the US election, the new policies that will be issued will also make the executives rethink their corporate strategy and capital allocation. More interventionism and more protectionism in trade and investment is on the horizon, in line with the UN report for World Investment Report. So more regional, bilateral, and ad hoc economic corporations going to be more popular than the multinational big unions. When we look at Turkish M&A markets, look towards Turkish M&A market in 2021, if Turkey overcomes economic uncertainties, investment landscape is really promising. Turkey has a very strong startup ecosystem. $428 million investment received by Getir, and the dynamism in the gaming industry helped the first quarter all-time record to be broken. The first quarter of 2021 was also the quarter with the most invested year among the last 10 years. So 61 startups raised a total of $509 million from angels and VCs, a new record for the ecosystem. And after the successful exit of Peak and Rolec in 2020, the dynamism in the game vertical also continues. Finberg's participation to Getir trigger other corporations, luckily, to invest in 18 deals, and 4 VC firms with total of $85 million closed their funds. Turkey, in terms of angel and VC investment, uprised to be the 10th country among the countries that most invested in Europe in the first quarter, while in the Middle East and North Africa took second place after Israel, which is really promising. Turkey also offers opportunities for investors in key industries, such as renewable energy, retail, and automobiles. In addition to the industry, these industries has great growth potential, with many emerging medium-sized companies seeking to grow. Also, the latest developments in the automobile sector with new energy-efficient models will be of foreign investors' interest and might be promising. We have a very strong banking and capital markets legislation, and also the strong privacy legislation uprising and even moving towards GDPR in 2022, which will bring newcomers to the ecosystem, like new technology hubs may be created in Turkey, new outsourcing and storing facilities might be established in Turkey as well. New opportunities also lying under recent legislative developments, 11th development plan, and new economic reform package as well. Open banking already regulated. Sandboxes will be allowed, which is very important and promising for the fintech and new disrupted technologies, the financial industries run by new disrupted technologies. Cryptocurrencies, there is a promising movement that it will be regulated until the end of 2021. So Turkey also follows emerging technologies like blockchain and AI. these are also very promising developments, and also it is promised that the bureaucracy will be lowered and IPOs will be more easier until the end of 2021. These are also within the economic reform package.
Well, Ülkü, thank you for the detailed information in the M&A sector, both on global market and Turkey, together with your forecasts. And the trends you mentioned, they seem very promising and excited. Looking forward to be part of such transactions. Well, a question, should we accept any ICOs in Turkey in recent future? What do you think?
Nilay, as the Ministry of Treasury and Finance, they just made an announcement that the cryptocurrencies, they are supervising it, and the regulation signal is also declared by the president within the economic reform package. So I'm sure it will be on the horizon. Maybe it is early to say, but the sandboxes also will be allowed. So it is also giving the signals that fintech and ICOs and CTOs are on the horizon in near future.
Well, great to hear. As
Yes.
you mentioned, Turkey revealed the new economic reform action plan recently and introduced certain action plans to boost investment environment. Could you please share with us briefly some highlights on the investment section, which might be relevant for our audience today?
Of course, Nilay. I was about to pass that one to the next slide, actually. It is really promising that within the new economic reform package, first the corporate governance subject was really important. So accountability and transparency will be the main subjects and will be the main goals as we see from the economic reform package. So the strengthening of institutional structures and establishment of economic coordination board, establishment of financial stability committee, these are very promising movements. And also for incentivizing investments in the reform package, there will be a signal for the enactment of law on protection of private sector investments, which is also really promising. This will be for protection of private sector investments to increase predictability of investments, decrease bureaucracy, and to create solutions for the problems during investments. And also it is also promised that investment dispute authority and investment coordination units within the ministries will be established. Hopefully this will also stimulate the M&A market a little bit and create some sustainability, create some confidence within the market.
Thank you.
I have a very limited time, so I will just move on to the new digital environment and what brings us actually to my next slides. It is really important to see that we are now in a virtual environment and virtual data rooms are accustomed, but now we are really supported by AI technologies during the deals. And also we are now seeing more and more virtual meetings and virtual signings and closings. So this will create, of course, some concerns around cybersecurity threats and also ability to forge relationship with management teams, extended regulatory approvals, and also workforce and talent, lack of workforce and talent using those disrupted technologies. So we need to be accustomed, and corporations need to prepare themselves for this visualization and also virtual processes and digitalization. And they need to be secured and really supported by cybersecurity technologies so that they will not face with any problems during their deals. And also throughout the integration phase, it is also really important to really accustom to those technologies. Technology integration becomes really important, and communication strategy with customers and also employees become more and more crucial through this virtual environment. And they need to shift their operating model adoption also to this virtual environment. And as my last topic, I will just shortly discuss this offensive and defensive strategies. As we all know, offensive strategies work for the ones in demand for new digital operating models and services to capture market leadership, who just gain confidence and gain value during this pandemic process. The corporations having those confidence can also use these strategies to establish new partnership alliances and acquisitions, vertical integration, multilateral partnership and alliances, digital transformation, using disruptive opportunities to enter into new markets or business areas, using different M&A strategies and combinations of IPOs and SPACs to increase scale or create value with more holistic solutions, and create a portfolio of investments on the edge of their core business. And defensive strategies for the ones in survival mode and keep their position. It will be identifying rapid turnaround situations, focusing on liquidity, cash flow, and working capital, considering alternatives to M&A like strategic partnership with their vendors or suppliers, and also develop partnership for non-core capabilities, and divest non-core or distressed assets will be on the horizon for the ones who will try to adjust their cash flow and to keep their future, safeguard their future. Thank you.
Thank you so much, Ülkü. Your points on AI matters and digitalization are quite noteworthy. Now I would like to pass to our next presentation. Well, Emre, we have seen a dramatic increase on the issues related to employment law matters. Could you please briefly explain how did the Turkish government measures on the protection of employment rights in general?
Thank you, Nilay, for the introduction, and good afternoon, everyone. Obviously, COVID-19 outbreak affected all our working lives, and today I am going to talk about three main impacts of the pandemic on Turkish labor law, which are termination prohibition, short-term employment allowance, and introduction of a new regulation on remote working system. So I want to start with the termination prohibition, which I believe is the most significant precaution taken so far to protect the employees during the pandemic. In April 2020, the government has prohibited the termination of employment contracts by the employers. The prohibition will be enforced until 17 May 2021, but the government is authorized to extend this deadline until the end of June 2021. The only exception to this restriction is termination on just cause. This means that the employers can only terminate the employment contracts due to gross misconduct of the employees. If an employer breaches the termination prohibition, there is an administrative fine of 3,500 Turkish liras for each illegal termination. And the terminated employers can also request their re-employment from the labor courts. Overall, I think this is an understandable precaution because the unemployment rate in Turkey was already very high, I think around 14% before the start of COVID-19 outbreak. So with this restriction, the government prevented the rise of the unemployment rate during the pandemic. In fact, the current unemployment rate in Turkey is almost the same as the last year. In return for termination prohibition, the government granted employers the right to place employees on unpaid leave. So the employers cannot terminate the employees, but instead they can place them on unpaid leave. Same as termination prohibition, this practice is valid until 17 May 2021 and can be extended until the end of June. The employer does not need the consent of the employee or even a valid reason to place the employee on unpaid leave. The employer is free to decide the number of employees that he wants to place on unpaid leave. The employer is also free to decide the duration of the unpaid leave, which can be days or months. The government makes a salary support to those employees who are placed on unpaid leave, but the amount of this support is around 45 Turkish liras per day, which is obviously very low and not obviously not sufficient to make a living. The second impact I want to talk about is short-term employment allowance.
Emre, before we move on to short-term employment allowance,
Yeah.
what about the total number of employees who have been terminated on just cause during the provision of termination period?
Nilay, around 176,000 employees have been terminated on just cause during the last year only.
Okay.
And these numbers are the official numbers. Maybe in reality, this number can be a little bit higher than this.
Mm-hmm. Okay.
If the working hours are reduced by at least 1/3, or the activity at the workplace stops for at least 4 weeks due to a general financial crisis or force majeure, the employer may apply to the Turkish Employment Agency for short-term working. Upon this application, the agency conducts a compliance check as to whether or not the requirements of short-term working are met. And as a result of this compliance check, if the agency accepts the application, it will pay a daily short-term working allowance to the employees. In March 2020, the government announced that short-term working allowance would be furnished due to COVID-19 outbreak. In order to benefit from short-term employment allowance, an employee must have been working for the last 60 days before the beginning of short-term working, and unemployment insurance premium for at least 450 days must have been paid for the employee within the last 3 years. The amount of daily short-term employment allowance is 60% of the average gross income of the employee. However, such amount cannot exceed the cap, which is decided by the government, and which is 5,300 Turkish liras. The short-term working allowance remained in force for approximately 1 year and has very recently expired at the end of March 2021.
Emre, do we know the total number of employees who have benefited from short-term allowance?
Yes, Nilay, we know. It is estimated that more than 3.5 million employees have benefited from a budget of 30 billion Turkish liras for short-term employment allowance.
Wow, the numbers are quite big and significant, isn't it?
Yeah, it is actually. And finally, I would like to talk about the introduction of a new regulation on remote working. As we know, the pandemic has boosted the remote working all around the world, including Turkey. While the concept of remote working has been in Turkish labor law since 2016, it became essential to regulate this type of employment in more detail. And eventually, in March 2021, Turkey has introduced the regulation on remote working. Now I want to go through the basic principles of remote working system. And first of all, according to the regulation, a remote working agreement must be executed in writing. This is the basic principle. The agreement must include provisions in relation to definition of work, how such work should be carried out, duration and place of work, payment of salaries, equipment provided by the employer and how to protect such equipment, employer's communication with the employee, and other special working conditions. If arrangements need to be made at the working location, this should be done before the start of the work. The parties will mutually decide who will cover the costs of such arrangements. The employer must provide the necessary working tools and equipment to the employee, and the employer should inform the employee regarding the principles of use, maintenance, and repair conditions of such equipment. Obviously, the employer should cover the costs, which are directly linked to the manufacturing of goods. The employee and the employer have the freedom to set the working hours, but the agreed working schedule should not be against the limitations which are already provided under the Turkish labor law. Communication management and the time interval between the employee and the employer should be decided mutually. And the employer is obliged to take necessary health and safety measures. The employer should also inform the employee about these measures and provide the necessary training to the employee. There are also some provisions regarding data protection. And according to the regulation, the employer should inform the employee on the company rules and applicable legislation about protection of company data. The employer is also required to define the data which is subject to protection and take necessary measures to protect such data. An important question is, how can the parties convert to remote working? And according to the regulation, at any time, the employer and the employee can agree to convert their regular employment contract to a remote working contract. The employee should make a written request to the employer in order to work remotely. Upon such request, the employer should evaluate whether the employee or the work is suitable for remote working and the other requirements of the company are met. And the employer must provide its response to the employee within 30 days, starting from the application of the employee. However, if remote working is implemented throughout the workplace due to force majeure, such as COVID-19, a request or approval of the employee is not required for such transition. Nilay, I think I covered the main impacts of pandemic on employment law, and I will be happy to answer any questions at the end of the presentations.
Thank you, Emre. Without doubt, these measures and employment incentives have provided some level of comfort to many companies doing business in Turkey. Ideally, we would like to see more developments on the employment matters, as it seems that many companies will be struggling with this uncertainty for a while. Our next topic on today's agenda is competition law and antitrust development in Turkey. I would like to give the floor to Metin now, who worked at the Turkish Competition Authority for 13 years, where his experience continued in the private sector as key executives. Metin, could you please start by informing us on the changes in the Competition Act in mid-2020?
Yes, thank you, Nilay, for the floor, and good afternoon to everybody. On competition law or antitrust law policy and law enforcement, we are experiencing a very dynamic period in Turkey nowadays, and it looks like this trend will keep going in the upcoming period, I guess. I would like to focus on three basic topics for the sake of this presentation, this meeting. The first one is the amendment of the Competition Act recently, the ongoing market inquiries, and my last topic will be prominent cases that are ongoing. Okay, so as for the legislation, the Competition Act was amended in mid-2020 last year, and significant changes were taken into force, aligning with the competition rules of the European Commission. I will focus on 5 basic and very significant changes that are currently in the force. The first one is the merger test is changed. So for now, dominant position test is abandoned and it's replaced with significant impediment of effective competition. This means that more mergers will be under scrutiny and may be prohibited compared with the past regime. And this change is very much in line with EU regime. The first case was a port merger reviewed based on this change, and it was actually prohibited. So the upcoming period will be interesting regarding this change. The second topic that had place in the amendment is the downgrade powers, the investigative powers of the agency. So the change is these powers are regarding digital devices and digital data is clarified. And accordingly, the authority is now entitled to examine all kinds of digital devices, the phones, the personal phones, and as well as the business phones are under investigative powers, and the agency is able to examine these devices by using forensic IT tools. So WhatsApp conversations are from now on acknowledged as evidences in antitrust investigations. And recently a guideline was issued regarding this subject that clarifies the process. My third point regarding the amendment is de minimis. So de minimis, you know, is a part of EU regime as well, and it's now introduced into Turkish competition law. The authority has been given a discretionary power here not to start an investigation for any violation that do not significantly restrict competition. This is very much, again, in line with EU regime. And a communique as a secondary legislation is enforced to clarify the process of de minimis. The third amendment, the fourth amendment that is really significant is commitment mechanism is enforced in Turkey now. In line with EU regime, again, if there is any competition concerns clarified at the authority side and the undertakings submit a kind of solution package, they can settle down the case and terminate the case. A communique as a secondary legislation here again is issued last month, and up to now, I guess 4 cases are finalized within the commitment mechanism. My last point regarding the amendment is the cartel settlement. Here, this is different from commitment. This is a settlement regarding the fine, and undertaking receive a discount if it acknowledged the violation and cooperate with the authority. Here again, a communique as a secondary legislation is in process and currently is under public consultation. Yeah, that's it for the amendment. And my second point, Nila, is market inquiries that are ongoing. And market inquiries, as you know, can trigger a formal investigation or can trigger some interference, some structural interference in the industry. So they are really important. And currently, 4 market inquiries are being conducted by Turkish Competition Authority. The first one is the FMCG. The first one is regarding the FMCG retail industry. A preliminary report was issued last month, and it was highlighting a number of antitrust concerns actually, and they will be having severe subsequences. And the second one I would like to highlight is digital markets market inquiry. This is ongoing. We don't have any news from that. I guess will be coming later this year. The third one is e-commerce. It's still ongoing. A preliminary report is expected soon. This will again bring some kind of maybe structural remedies and so on. And the fourth market inquiry, which is being conducted by the agency, is about online advertisement industry. It starts a while ago, so it's ongoing. We'll see what will happen. Yeah.
Well, it seems amendments in the Act are quite bold. Even though, as you say, they are pretty much in line with the EU regime, investors may not be extremely happy to comply with such requirements.
Yeah, that's correct.
Well, as an expert practitioner of the Turkish Competition Authority, do you think that the authority is in an era of stricter enforcement recently?
Well, actually, we still don't have a clear cut. We cannot reach a clear-cut judgment based on recent cases, but relatively, yeah, higher fines are being observed nowadays. We'll see what will happen, but I think this may be linked with kind of the changes with the downrate powers here, because the agency is now able to investigate and examine all devices, mobile devices, and they can receive higher degree of evidences, I would like to say, and this may lead to higher fines as well. This is my opinion. Let's see.
Yeah, let's see.
Okay,
yeah.
So to continue, my last point for this meeting is the ongoing prominent cases. Three cases I would like to bring the floor and take the attention on. The first one is the ongoing case about the FMCG retailers, the chains, and the suppliers. Here, the horizontal and vertical issues are under scrutiny. The investigation report is issued to the parties, and the final judgment is approaching. This will be a big investigation. The second one is the one about Facebook, WhatsApp. This is a global case. Everywhere we are experiencing this issue, and the use of WhatsApp data in other Facebook apps are under scrutiny here. Turkish watchdog here took an interim measure and prohibited the transfer of this data, and the formal investigation is going on now. A third interesting investigation is about private hospitals. Here we have like more than 40 hospitals are under investigation, and the subject of the investigation is wage fixing and no poaching. This may be a unique judgment if the investigation is finalized, and it's ongoing here. Yeah, I guess that's all I would like to highlight about Turkish competition law enforcement in Turkey for the recent times, and I'll be happy if any question comes to me after the presentation. Thank you, Nilay.
Thank you very much, Metin. Actually, before we move on, I was wondering whether is there anything linked with competition law and policy in the new economic reform action plan?
Yes, there is one point in the agenda, and it's about digital markets, Nilay. It is proposed that digital regulation regarding digital markets will be issued recently, and the Turkish Competition Authority is established as the responsible agency to design these regulations. We are expecting a new regulation just like the ones in EU, the Digital Market Act and Digital Services Act. Yeah.
Okay. Thank you. Thank you again. Well, last but not least, our final topic today on today's agenda is tax. Murat, as an experienced tax practitioner in the Turkish market, how would you like to begin? Well, how is the climate of Turkey nowadays, and what should the audience of today know about it?
Okay, Nilay, thank you. Yes, since it is subject to tax, I am at the last. I hope I'm trying to not to make you so bored. I will tell you a couple of things about the general tax environment of Turkey first, and then I'm gonna try to tell you what's going on in the agenda of Turkey in terms of taxation. Actually, first of all, let me tell you that the general rule for taxation in Turkey is declaration method. So this means that you need to submit your tax return. But since it is although this is the general rule, for many major direct and indirect taxes, like income tax, value-added tax, excise tax, and so on, we can still encounter so many withholding tax mechanisms in the legislation. In other words, our tax authority really likes holding responsible a party with other parties' taxation. I think it's very related to the mindset of the tax authority and maybe the long period developed approach against tax evasion. One another important issue regarding the Turkish tax environment is the capability of using electronic tools. Believe me, Turkish tax authority, I mean the Ministry of Treasury and Finance, uses and adapts electronic ways to do taxation very quickly and very effectively. I remember the electronic tax declaration started in 2004, and we have been witnessing so many other developments in the last 17 years. Now e-books, e-invoices, e-returns, e-tax office, e-payment, e-consignment document, and similar ones are very routines of the daily tax environment of Turkey. And coming to agenda of Turkey, first of all, tax inspection. What we have been observing, especially within 1 year period, is the number of tax inspections increased. Without a doubt, the pandemic and its devastating and disruptive effect on the economy is the leading factor for this issue. Moreover, as we see in other countries, it's also being planned now to increase the corporate tax rate for 2 years in Turkey temporarily, according to an amendment law. By the way, that hasn't come into force yet. The corporate tax rate would be increased to 25% for this year, 23% for next year, and after 3 years, it will get back to 20% again. For a long time, tax authority has been applying a risk assessing model for detecting the companies to be inspected. And again, it gets help from technology to do that. There are several predetermined factors indicated over electronic declarations and returns. By aggregating the company's score, the system determines the ones to be inspected. For example, if a company results in a loss 4 years in a row, this would increase its risk score and may lead the company to the inspection. Tax inspector personnel are very young and also very familiar with the new technologies, so this helps them be able to conduct many inspections at the same time. The approach developed in last years by ministry is to arrange tax inspections heavily on sectoral basis. In past years, there were so many complaints about inequalities between companies in terms of taking under the tax inspection. Through sectoral inspections, not only this inequality is eliminated, but also tax losses are eliminated at a very large scale. Let me inform you that the recent inspections are most related to transfer pricing. In recent years, tax authority pays attention to TP transactions more than ever. There are several reasons for that, sure. But to me, the most important reason for this, there are lots of foreign companies in Turkey, and according to, at the end of the day, the profit needs to be transferred abroad. So the TP is very hot topic in the inspections. In addition to this, management fees, royalties, debt to shareholders can be questioned in the inspections as well. We see there is a strong expectation for a new tax amnesty nowadays. Tax amnesty happened in Turkey 3 times in the last 10 years. Why this is so important? It's because of that it has some effects on both tax inspections and litigations. But to me, there are 2 important points in tax amnesty. The first one is you're able to end your tax controversy with the tax authority by paying some of the tax principal and penalties depending on your status of your case. I mean, it changes upon your case status. For example, if the first degree decision is in favor of you, then you need to pay less amount of tax principal and tax losses. The second important point in the amnesty, in possible amnesty, it provides taxpayers an amazing opportunity to close some previous year's transactions and recourse to the tax inspection. Once you declare some part of your previous year's tax basis, the tax inspection is eliminated for those years legally. As I said, there is a strong expectation for an amnesty because taxpayers, companies especially, want to know if there will be a retrospective surprise due to their tax cases or tax inspection. We will see whether there will be another tax amnesty or not. My personal thought, actually, there will be a tax amnesty within 1 year period. And it was recently announced that tax procedure law will be updated. This could be important because there might be a new inflation accounting requirement. In the last 5 to 10 years, there has been serious inflation in Turkey. And since it didn't happen very suddenly, the criteria which initiate inflation accounting were not triggered yet. On the other hand, the last inflation accounting was applied in 2005. From that date, there hasn't been an inflation accounting application in Turkey. So companies' balance sheets do not reflect the current assets now. Furthermore, companies' capital has been weakening against this disruptive inflation effect. I believe that there will be also an amendment for inflation accounting. I told you that transactions related to transfer pricing issues are important for the tax authority. As you know, this is not a hot topic only in Turkey. For Turkey, it concerns many tax authorities and many companies all over the world. Turkey applies OECD's base erosion and profit sharing actions into its local legislation. I need to admit that it's being done a little bit slowly, but Turkey spends a serious effort to catch the deadline given by OECD. As to this topic, Turkey adopted very recently BEPS 13 action, CBCR reporting. So besides the local file, now Turkey requires CBCR and master file as well. Turkey has also adopted BEPS 15 action, which is also called multilateral instrument, into its local legislation. All these efforts are very important, not only for Turkey, but also for the world, because if the BEPS plan is not successful, the tendency of the tax authorities might shift to increasing indirect taxes, and this would seriously affect much more real persons rather than companies, Nilay.
That's correct, Murat. Thank you for the brief information and headings as to tax environment in Turkey, especially your views on tax amnesty and recent developments and TP-related issues are quite welcome. How about incentives? Could you please give us some information about tax incentives effective in Turkey right now?
Yeah, okay, thanks. Actually, we are doing this kind of presentations time to time. I determined 4 important tax incentives before, and still I'm at those 4. I believe the power of those 4 incentives, because I think those make Turkey a very attractive country. You can see in the slide, by the way, what are those. In the first group, there are investment incentives, and then R&D and design incentives are very important. Turkey provides a serious tax advantage to companies making cash capital increase. And the last one is tax exemptions for companies and their personnel engaging in production activities in free trade zones. Let me give you a few details about these incentives. Yes, the first one is, as I said, investment incentives. Through investment incentive certificate, it is possible to decrease the corporate income tax rate to 0%, even to 0%. It applies up to a certain amount of investment made. It changes according to type, amount, and the location of the investment. Not only low corporate tax rate, but also there are some other incentives relating to this. Social security premium of employees is supported by the government, VAT and custom duties exemption on the machinery of investment, interest rate support, VAT refund, and even land allocation are possible. If the investment amount is more than 500 million Turkish liras, then it can be even applied to a tailor-made incentive program. This program grants more attractive incentives to investors. It is very important because it's almost the most attractive one ever presented in Turkey for the companies to invest first time in Turkey, and companies currently having business in Turkey, both of them can benefit from this incentive. We have lots of clients. Utilizing this incentive for years. The key point is here: if you make your investment plan initially, if you have a plan in terms of making investment in Turkey, you may decrease your corporate tax burden up to 0% for many years, as I said. There are also incentives relating to firms dealing with R&D, research and development and design activities. The most important two incentives under this, 100% corporate tax deduction and up to 95% income tax exemption for the personnel who work in those centers. It could be benefited through either establishing startup in Technopark or establishing R&D or design center in the current plans. After an R&D project is conducted, provided that a usable model or patent is acquired, there will be also 50% corporate tax exemption over the related revenues to be generated over the project. And coming to cash capital, it's again very important incentive because it's interesting and endless incentive. Whenever you make a cash increase in your capital, you are entitled to take 50% of the annual interest of that money as a deduction in your corporate tax base. If the money is used in investment activities, then the ratio is 75%. Let me give you a very quick example for your better understanding. Assume that you increase your capital in cash 10 million Turkish liras, for example. Then the annual interest rate is, and assume annual interest rate is 10%. This application provides you half of the interest, annual interest. In this example, 500,000 to deduct from your corporate tax base every following year. So as I said, it provides you an endless deduction. Furthermore, when it is combined with investment incentives and R&D incentives, then it grants enormous advantage as well. My last golden incentive is free trade zones. Free trade zones provide full corporate tax exemption, provided that dealing with manufacturing activities. Moreover, it grants income tax exemption to salaries of employees in case 85% of the products export to foreign countries. There are also VAT, custom and stamp duty exemptions in free trade zones transactions. I have by far tried to explain you for incentive mechanism, Nilay, but believe me, there are more in Turkish tax legislation. Thank you.
That's very good to hear. Thank you, Murat. Even though this is the last section of today's agenda, in particular, incentive section should be quite tempting for investors in Turkey. After being informed about what we have discussed today, including the current situation and forecasts on the M&A side, employment law matters, and tax aspects, we can conclude that the Turkish government acted well and used the experience of other countries to fight the battle with COVID-19. We see that the business is already getting back on track, and things are slowly but steadily getting back to normal. As you know, we have been through many crises in Turkey recently, and those kinds of shocks are relatively normal to the Turkish business world. We are now facing this crisis together with the world, and we believe that the business world will find its own ways to come over this. Please let us know if there are any questions in relation to the topics that we have been discussing today. We would be happy to attend. Thank you again, and until next time, stay safe.